Now we want to continue to talk about this market, the big picture, and Phil Palumbo is here, right here on set, President, Chief Investment Officer, Palumbo Wealth Management. Thank you for being with us. You came on another record-setting day on Wall Street. Some of your thoughts on how we got here and what happens next?
Yeah, so well, first thing, I think in the short term, there's a lot of complacency with the market. So like the way I explain it to clients in these types of situations, when markets are a little bit on the overbought side, where everybody's buying the hype of what I believe we are going to see, markets can get a little bit ahead of themselves. So in the short term, I wouldn't be surprised if we see some volatility. And the volatility could come around tariffs, right? And the completion of tariffs and what that's going to look like in the very short term.
Right.
But there is no doubt in my mind that I feel that we are moving in towards a U.S. expansionary period for a lot of reasons that gets me excited.
I know, I saw the list of some of the tariff agreements. I saw Philippines, I saw Japan, and there was actually one more that actually came in, and they are getting closer to Europe and coming up with that. So, I mean, all good news there in the big picture. That being said now, with investing, do you, are you taking profits? Are you sort of using pullbacks as buying opportunities? What's the strategy?
Yeah, so like I explained to clients, in this situation where you feel like you have good growth prospects going forward for a lot of reasons, such as the AI spend that we're seeing, acceleration of depreciation, and I think the Fed will be cutting at some point in the next 6 to 12 months. So any type of pullback, you definitely want to be a buyer here. So I'm trying to be as patient as possible. It's not easy, right, holding cash, but in this type of environment where you have a little bit of overbought market, when you have some complacency, you have to be patient, and any type of dips, you do want to add to it.
So what would you be buying? I mean, what do you think works like in a portfolio now? Because you still have this back half of the year, and a lot of folks still think, look, well, this was the 12th record close of this year yesterday, S&P, right? The 12th time. Do you see more records, So what kind of strategy are you using?
I do. So we own a core stocks of 20 businesses, and we're going to be adding to, and have been adding to, is Google and Amazon are two of the biggest holdings that we're going to be looking to add to and continue to add to in any type of weakness. And Google for us is a company where I really do believe the whole death of search, which is most investors believe is happening, is not happening. If you look at Google's earnings yesterday, they were really terrific. They really nailed it in terms of search. Their user visits are up 4 times over the past year, and just Google as a whole has incredible infrastructure. So we see that business as a cash flow generated machine that's not going to stop.
Yeah, understood. I mean, right now it's at 193. Where do you think this could go?
I think 250 is in the cards. We think based on present value free cash flows, as we forecast going forward, even though there's a lot of CapEx spend, we think it's trading at around a 20-25% discount. So you do the math, you could arrive at somewhere around 240, 250.
What about Amazon, which right now today is trading at a level of 231? The high, I guess in February, was 242. So to 231 now, what do you think drives this higher, and what's your price target there?
Yeah, so we don't look at actually the stock, right? We care about more like valuation perspective. When you look at free cash flows and potential free cash flows and discounted until today. So when you think about Amazon's businesses, they're beyond just an e-commerce business. Right now, ad spend and AWS is rocking and rolling, right? So they're the leader now in the cloud business. You speak to anyone who's a big executive at a major Fortune 500 country, they'll tell you that their AWS cloud business is just dominating. So the margins on that business is over 30%. The margins on the ad business is over 25-30%. When you do the math of that, the free cash flow that's going to be generated from those businesses is going to be incredible to Amazon. So that's why I see Amazon just continuing to grow over time.
So at 231, you think it goes to 250 pretty easily, right? Or more?
Correct, yes.
Okay. That's worth noting overall. Gold, is that something you like or follow closely?
Gold has been a core position in our portfolio to hedge out stocks and if inflation was to peak its head again. It's always been for a very, very long time. Since I launched my firm just over 5 years ago, it's been the best performing investment, on average 14.5% return, outperforming the S&P 500. So we've done as a firm, we've trimmed our gold position, just took some chips off the table, not trying to predict a major downturn, but just took some chips off the table, and then we bought some Bitcoin.
Oh, you did? Bitcoin. Where do you think Bitcoin could be headed? I mean, we crossed 120 last week. We were at 123,000. Where do you think Bitcoin really could go in a year or more?
For a lot of reasons, I see Bitcoin over the next 3 to 4 years at 500,000, and then I think 1 million over the next 10 years.
Wow. That's a big call there. Let's talk more about just the big picture. The Fed. What do you think the Fed should or shouldn't be doing?
I think the Fed and how the Fed has not cut rates so far, to me, is absurd. I think that the housing market is on shaky ground. Affordability is at all-time low. We need to fix that. People have to be able to afford homes. Prices of homes have stayed the same because nobody is upgrading or leaving their home because they're at a low interest rate based on where rates were 3-4 years ago. That needs to change. So we need rates to come down. We need pickup in M&A. If you look at the private equity space, which is a phenomenal space, a lot of these private equity firms are looking to sell their companies or buy other companies. But with rates where they are, it's cost prohibitive. So if we could actually bring rates down, that would only enhance what I think is going to be a great expansionary period.
Do you think that some of the other things, tax cuts, deregulation, you're waiting on more on that to spark action here?
Oh my gosh, the permanence of the tax cut is tremendous, right? So now if you're a business person, just think about it. Now you know, here's what your tax rates are going to be. You get the acceleration of depreciation. So if I buy a piece of equipment today, I get to depreciate 100% of that in year one. And think about all the onshoring that we're going to see, right? That's not going to change no matter who is president. So all of that stuff is going to be additive to growth. It builds confidence.
Yeah, and it's so great to have you on, and it's nice to hear your confidence in the market, Phil. All right, good. Phil Palumbo, President Chief Investment Officer of Palumbo Wealth Management. Thank you so much.